Okay, let's go. So, the euro, there's absolutely nothing happening yet. You see? We're just stuck in accumulation, not ready to move. Honestly, I think everyone is just sitting and waiting for one thing: the tariffs. We'll see how it plays out. There was a Trump speech yesterday. They said it might not be 20%, maybe a bit less, but trust me, I've been living in America for years. Politicians are like chameleons, they'll negotiate everything in the end. There was actually a funny moment when Trump was preparing for his second term. He was interviewed and mentioned how he called Macron because Macron had introduced customs duties on some American goods. Trump said, Manuel, it's not good to do that. He asked nicely to remove the duties. Macron replied that there was nothing he could do, as this was the parliament's decision. Trump calls back and says he's imposing 200% customs duties on French wine. Now, keep in mind, the US is one of the biggest markets after China for French alcohol, cheese, and other products. They immediately called back and lifted all the duties on American goods. The US didn't impose them after all. So, yeah, it's all a bit of a circus. They'll negotiate everything, I'm sure of it. Sure, the market will get shaky for a while, but I bet they'll figure it out. That's how these things go. It's all a show. They might delay the duties, introduce them, or cancel them a few days later. But here's the interesting part. I was at the car dealership recently looking for a new car, and the dealer was already preparing for the duties, adding an extra 4 to 5,000 to the price. They even put it in writing, saying duties would most likely be introduced. So they're already adding a 20% duty to car prices. Just picture this: a car worth 100,000 could now easily jump to 115 to 120,000 just because of duties. So let's see how it plays out. We'll wait for the market to show us something clear. All right, let's move on. I'll show you something now. Look closely. This is the coin I recommended yesterday. 2T slash USDT was a really good one. I recommended trading it from this level right here, and now it's trading even lower. Look, after the false breakout, there was no pullback at all. It'll most likely keep moving further. It's already given us almost 20%. Actually, 36.8% total, and we caught 8%. Soon we might be looking at almost 30% on this coin. It moved beautifully. This is future. Traded on USDTP. I think it'll continue to drop further. Take a good look now. This coin, you can see there was a pump here. The asset spiked. There was a sharp upward movement, and now the price fully overlaps it. Also, notice this: when you spot such accumulations, always pay attention to these assets because exits from accumulations like this are usually very strong. See this wide accumulation? Almost 25% of the price range. In 99 out of 100 cases, you'll get a powerful exit. The exit will be super powerful. So, most likely, this coin will drop even more and eventually come back down here. We're looking for another 40% drop. All right, let's move on. Let's move. New Zealand dollars. Same story. The movements are so narrow here that you just won't be able to hit the take profit properly. Switch to a lower time frame and you'll see it's very, very hard to catch any decent take profits. We always try to focus on stronger setups. In this case, we first went back into the short zone, then into the long zone. JPY per USD JPY is dead. It's back in the accumulation zone again. Nothing happening here. And I want to teach you something important. The thing is, the market doesn't offer good entries every single day. That's exactly why I always teach my students to trade everything. My students know how to trade crypto, Forex, stocks, futures, and even pass the prop challenges, the whole package. That's why, if you see that an asset is stuck in some accumulation zone with no strong signal, my advice is simple: don't enter. CHF is dead. GBP is dead too. The accumulation zone just needs to be shifted a bit. Here it is. The price went up and down around the level here. We do not adjust the lower level of the accumulation zone, which is good. It could still be shifted a little more. And now you can see that GBP is sitting inside the accumulation zone. No need to touch it yet. Some might ask, can we trade from the boundaries? Yes, you can trade from the boundaries. If the asset is stuck in a range, trading from the boundaries are still an option. Let's move on to oil. The setup is already broken, but for now, it is so good. ETH per USD, I'll warn you right away, Ethereum may continue its downward movement. I definitely put Ethereum on the list of assets to short. My level is around 1800. Anything below 1800, I'd be looking to short. Something just feels off with Ethereum. If BTC is still holding up, Ethereum has basically stopped fighting back completely. It's just bad, no real bounces, nothing. I don't know, maybe I don't fully get the crypto fundamentals, but I definitely know how to read a chart. And when there are basically no bounces, that's usually a bad sign. Let's take a closer look at Ethereum together. Yeah, I've got the level marked at 1789. Look at this. It's just depressing. Last time we were at this level was way back in 2023. Now we're coming right back to those prices, which is not a good sign, especially considering that BTC is still hanging out near its maximum values around 86,108. Nothing to worry about there. But Ethereum sitting near the 2023 level, that's just really bad. And considering it was 4,000 not too long ago, we're already looking at minus 50% from the top. Most likely, as soon as it approaches or dips below 1800, it will be sold. Silver, gold. I'm really bullish on both silver and gold. I think both of them will continue to grow. Those of you who listened to me back on November 6th, you remember I said it made sense to buy it. Here is November 6th, right here on the chart. Since then, gold is up 30% from those levels in just 6 months, plus 30%. So, yeah, I'm very bullish on gold and silver. Watch closely. What is a primary breakout and what is a secondary breakout? Primary breakout is when the asset never broke out the level on the left side of the chart in the short term past. It might have tested it, but it never actually broke it out. This usually means the asset is ready for a breakout. So, where do you place your stop loss? Now, listen closely. You place it behind the breakout bar or very close to it. And here's why. If that's a mistake and it turns into a false breakout and returns back into the short zone, there's no point in having a wide stop. It'll get hit anyway. Therefore, during the initial breakout, and by initial breakout, I mean when the asset has never broken through the level, this is the key moment. So during a primary breakout, you always keep the stop loss tight right behind the breakout bar or near the level. Now, what about the secondary breakout? What does the secondary breakout mean? This is when the asset has already moved and is going for another breakout. Here are the conditions. Write them down. First, the price shouldn't be moving up and down around the level. If it happens, we'll review it again later. Second, there should be no deep rollbacks. A deep rollback is less than 30% of the daily ATR. Third, you want low near level volatility. The volatility must be low. And the fourth rule, your initial trading scenario must remain the same. If you're planning to short the asset, you should keep doing this. Let's go over it one more time. Rules for a secondary breakout. First one more time. The price shouldn't go up and down around the level. No deep pullbacks. Keep it less than 30% of the daily ATR. Any pullback deeper than that sucks out the energy. The asset simply won't have any energy left for a proper breakout. Third, low near level volatility. This means that the bars, which are above or below the level, are small and do not break out the level. This is known as low near level volatility. And fourth, if you are planning to sell the asset, the trading scenario must remain the same for the short trade to be possible.